What's up everybody, Tom here with another video. In today's video, we'll be discussing the latest stock market news moving the markets right now. We'll also be taking a look using our technical analysis top-down approach at Bitcoin, Ethereum, the S&P 500, US 100, gold, and dollar index. I can just say wow at what's happening in the cryptocurrency markets right now. As expected, we are going to be getting a 20% plus fall, and this is pretty standard to cryptocurrency bull markets. They fall, they flash crash, and what do they do next? Let's take a look together right now. Stay tuned. Okay, I think it's appropriate to start here with what just happened last night and yesterday with Bitcoin and LiQWYD and all of the others. So we had some very large moves. Basically, we moved from around 19,000 plus on Bitcoin down to 16,200, and now it's doing some type of recovery. And we're taking a look at that throughout this video. Also having a look at the stock markets overall, it's a pretty muted week. There has been a pickup in tech stocks. So we've seen the US 100 do pretty well, but overall it's been relatively stable in terms of the indices, with just minor stock rotations really affecting the markets. But what about the rest of the markets? What's happening there? Well, Bitcoin price has just plunged well over 10% in its Thanksgiving correction. Now, we were talking about this earlier this week, and we actually ended up getting almost close to all-time highs on Bitcoin very quickly. Do we think this is the end in Bitcoin? I have a tendency to say no. During the 2017 run-up, we saw several times where Bitcoin, Ethereum, XRP, all these others did this type of crash event, and it was really more of a flash crash followed by a pretty huge purchase up. We've got to remember there's a lot of interest and pent-up demand now for Bitcoin and Ethereum because it's creating a lot of buzz. It's in the mainstream media again, and that means buyers will come back into these currencies most likely. Let's just start our analysis straight away today, and we'll go into the dollar index first, because you would think that this would be moving considering those movements on Bitcoin and Ethereum. It doesn't really matter on those markets though. They're going to do their own types of things. So here we've got the dollar index, more important probably to our stock trading and gold kind of trades. And you can see here that it's really still hovering around that 92. We're sitting at a 92.02 at the time of recording for this video. So nothing much has changed here from a dollar index standpoint. If you're looking at signs that's going to go bullish, really what you're doing is you're trying to get it past this 20 exponential moving average on the daily. You can see it's found resistance twice. If it does come back up, then of course, if it finds resistance here again, I would say it's very likely to get through that 92, as that will be a series of lower peaks. However, at this stage, we're really just trying to hold this level, and you can tell that this level is really key to the markets. This is why identifying things with technical analysis is so important. All right, well, let's take a look now at Bitcoin. So let's put it in perspective firstly. Let's go to our weekly chart. So to put the Bitcoin crash in perspective right now, is it that bad? Not really. Is it unprecedented? Certainly not. There have been very large pullbacks in Bitcoin during bull runs, and we'll just have a look over here at the 2017 to 2018 high, and you can see that several times there were very large pullbacks, and we mentioned these before, 3,000 all the way down to under 2,000, a very large percentage move at the time. Then we had 5,000 all the way down to 3,000. You'll notice that the previous resistance here held as support, and that's going to be the key thing that we're going to talk about throughout these cryptocurrencies today. And it's very important that we understand the market structuring during these pullbacks. Even here, there was a pullback, and then the next pullback came back down to the previous resistances here and mostly bounced off that level. So here we are on Bitcoin US dollar. This is the 20 exponential moving average, this red line, and you can see that the market isn't even close to that level right now. It's in a very heavy bull trend, and it will eventually have to pull back and meet with that 20. If we go to a daily, you can see here the Bitcoin went from that kind of 19.5 high and then went all the way back down to the 16.2 level, where there's some previous resistance which is acting as support. Go to a 4 hour, there's a bit more market structure. I think it starts to make some sense. We can put probably our horizontal line on this level as well at this point, and then see why there is some bouncing bullish pressure. Look, there's a bounce wick there, followed by a little bit of a wick here again, and of course some buying pressure right now. If we go to the 1 hour as well, or 2 hour charts, you'll start to see more wick buying off this level, which is very, very bullish. So where do we think the buyers truly get back in control of Bitcoin? It's probably around here, this 17.5 zone, 17.4 zone. Why is that? Well, it bounced once, came back here, and then of course retraced back down and did a double bottom, which could be potential here, and then tested the area. Now what we're looking for is the market to come back up, break through this, and that will really signal further buying pressure, potentially into the 18.2s, where there's some support, and of course back into maybe even the highs. It's probably not over for Bitcoin yet. This is very standard, as we said, in these kind of moves. For the bulls though, you do not want it to get back under this level, because if it gets under this level, we will see further selling. And really where to after that? Well, it could go all the way to the 50 exponential on the daily chart. And that will put it back at $15,000. So I don't think bulls want Bitcoin down there. And I have a tendency to think that it's probably not going to do that based on the current moves, based on the current psychology of the market, all of those types of things. If we have a look here as well, the pullbacks are usually pretty much into 38.2 fibs. We didn't quite get that. We got 23.6. But when we go over to our Ethereum studies, let's have a look at this and then just pull up our Ethereum for the last couple of weeks. So we'll take it from the last swing here and we'll pull it up. And you'll notice it's gone into the 38.2 and 50 Fibonacci zone. So very important level here on the weekly. You'll also notice it's far away from the 20, but not as much as Bitcoin in this case. If we go down to the daily, again, why is it bouncing off this level right now? And I think Ethereum has even better in terms of technical analysis, role reversal. Look at this 480, previous resistance over here. Let's put the line up right now for everybody. This is a pretty amazing level, and I think a lot of you guys would definitely see this level. If we have a look here, resistance, resistance, resistance acts as great buying support. And that makes a lot of sense when we think about what's happening on right now. We go down to a 4 hour, again, nice bullish wicks here. We can see the strong retracement already happening with F518 already from the 480 lows. And if we go down to something like an hour, again, very similar setup to Bitcoin with a intervening peak here a little bit higher. So we've got basically a 20 exponential moving average. It's moving into that right now. It might find some resistance there, but if it gets through and closes above these levels over here, what that's doing is it's signaling a double bottom in the direction of trend, and it should continue then to bull up. Remember, there should be pent-up demand from retail community wanting to buy into these cryptocurrencies cheaper, and that is what they're seeing right now. Very similarly, XRP, same thing. Multiple resistances here on the 4 hour. You can see that last time it struggled to get through the 50 cents. Why has it gone back down to this 48? That's where the resistance is. It's coming off the 50 exponential on the 4 hour as well. And if we go down to the 1 hour chart here, you'll see a very interesting similar phenomenon coming back to the 20 exponential on the 1 hour, similar to those other cryptocurrencies. And at the same time, we've got that little bit of an intervening peak where if the market gets through this, it really signals further buying pressure back to possibly test the previous highs. Let's just quickly talk about that in comparison to gold. So gold's really trading more based on US dollar right now. It's holding its own at its very important base of 1800. And we knew that when it closed below this level, it was going to basically go towards 1800. Nothing really has changed on gold. It's pretty much coiling down here. If you're somebody that wants to pick up gold and pick it up cheaper, what you're looking for really is basically a break of these kind of resistance highs now. Now, I'd probably take the wick break. I'd want to see a wick kind of taken out and then moved above. So the market would come up, it would break through these moving averages, it would then come back, retest the previous resistances here, and then at the same time, these moving averages being the 20 and the 50 would be acting as dynamic support with hopeful move up back to the 1850 level. If it breaks under 1800 though, guys, that is going to be very significant and it will most likely gravitate back to the 1750. So it's really these $50 chunks that we're seeing in gold. It's all or nothing on both sides. That seems to be the kind of consensus from a lot of technical analysis thoughts out there, and also my kind of thoughts out there as well at the moment. If we take a look at the stock markets and broader markets as a whole, put-call ratios got incredibly low, which was 0.59. I unfortunately couldn't get a video out yesterday, but that really was signaling some beginnings of selling. We've now seen put calls go up, so that is more puts are being opened, but it's still relatively low compared to the highs that we've seen. To put this in perspective, if we go to a daily, you can see that it often doesn't get this low, but when it does, it can signal a little bit of a correction in the markets. Another thing of interest is the volatility index, or VIX. We're back at a 21.3 level, and this is a clear level of support for the VIX. We've talked regularly about not letting the VIX get under 20 if we want to see still a lot of volatility, a lot of fear, and big spikes in the market. And this is the point where the VIX must increase if it is to basically go back into a corrective phase in the markets. We want to see the VIX hold the 21, bounce off this level, and not get underneath it. Underneath it would probably signal a pretty much stabilization in the markets right now. If we take a look at some of our favorites, the US 500, the S&P 500, as we thought earlier in the week, this little futures kind of channel that was forming up broke and closed above. The market went back up and it's tested kind of its previous highs over here. It actually held on the futures a 4-hour above the 3640. But now it's starting to turn around. And when we think about this from a price action standpoint, what we've got here is we've got a peak, we've got a trough, we've got a lower peak, and we're about to form potentially a lower trough. If we get one of those and we close below this zone, below the 20, we could see further selling back down to the 35.80, and then we'll have to see whether the bulls and the bears kind of fight it out and we see even further weakness. We're starting to kind of topple over here though. Let's have a look at the SPX together, the real market, and just think about what's going on right now. Well, basically on the real market, we have 3 major peaks that have happened. We've got our first one, our second one, and our third one. They're all within 20, 30 points of the same price. What happens if the market gets underneath these previous times, like previous zones here? What will meet it here? Well, the 3540 will be met with a 50 exponential on the 4-hour. Very significant time frame, very significant moving average. If this happens as well, we could be looking at a triple top market formation, and that would be very, very, very negative towards the market. But as it stands, the market is still bullish. It's still looking pretty good. And of course, if it gets through this zone, moves up, and then it pulls back to it, it would be really where the resistance acts as support. So for bulls and perma bulls in the market, there's actually even more upside if the market closes above here, moves back down then after, and then probably reaches maybe even a 20 exponential at the same time. So there's actually quite a lot of bullish strategies and bullish thoughts here for the SPX. I would tend to think that next week's going to be possibly a negative week, as it has been in the past. We talked about that earlier, and that's just due to Thanksgiving hype kind of dying down, and then we have a bit of a breather before the Christmas rush. So we'll have to see if that happens again. US 100 being the stronger kind of indice of the week, with people moving back into tech a little bit. I don't think there's too much to mention here other than it did break through that 12.1 level, which was previous resistance. It's coming back down to test that area at the same point as it's hitting a 20 exponential. I don't know if I love this level that much, or this zone, and that's why I think a lot of the trading right now has been in the cryptocurrencies and in other markets. The trading's kind of slowed down a little bit in the stock market right now, unfortunately. All right, guys, well, hopefully you enjoyed today's video. If you did, please remember to subscribe and, of course, hit that alert button. And we'll see you on the weekend for another weekly analysis of the markets moving forward. It's going to be a very interesting Friday in the US. Will we see some kind of low liquidity event sell-off? Will we also see potentially even bigger moves on things like the cryptocurrencies in and after Thanksgiving? So it's going to be very, very interesting, and we look forward to seeing you then. Thanks very much, everybody. And of course, as always, make as much money as humanly possible. Bye for now.